Hey, this is Doug Field along with my co-host Brent Macy, and welcome back to Healthcare Consumerism Radio. We're pretty pleased today to have a guest joining us from Lockton Benefit Group. We've got Mike Smith, Director of Exchange Solutions. Mike, good morning.
Good morning.
Hey, a very topical subject right now. Would you not agree? Exchanges.
I would, and I think there's probably an abundance of differing opinions and confusion, and hopefully we can shed a little light on some of the things that are developing.
Yeah, Mike, talk to us a little bit about, I think a lot of people know Lockton. You might want to do just a brief background on Lockton, but then talk about your role here and how you're trying to help, clients and actually your team members help clients move through this decision-making process.
Sure. So Lockton is, we're based in Kansas City, Missouri. We're the world's largest privately held insurance broker, where we focus in areas generally in property and casualty, as well as employee benefits. Mm-hmm. And the employee benefit group, of which I report and I work in, we support our field offices as well as our clients in areas around actuarial, compliance, communication, HR outsourcing, and technology. And our newest practice that I head up, which is our exchange solutions. And so, what we have done is we've done, an examination of the marketplace and kind of returned to our knitting, whereby we're putting our clients first. Our strategy is to really work with a client to understand, what their goals and objectives are as it relates to employee benefits. Find what barriers may exist to achieving those goals, and take them through that. Help them examine their options and go forward. And so, in the area of exchanges, there's obviously a tremendous amount of interest building in the marketplace, and we're using our experience in the carrier space, in the benefits administration, outsourcing space, and the technology space to help to make recommendations to clients for the right fit solution.
Mike, what are some of the key questions that employers should be asking? I think that's where they probably need the most help. They're trying to figure it out, but what are the questions they should be asking?
So I think before we get to questions, maybe we should think about some of the promises that are being made out there about and first of all, I guess let's define kind of the exchange marketplace. Mm-hmm. So for this conversation, we'll talk about group exchanges, not the public exchanges or kind of individual Medicare exchanges. Happy to talk about those. But as it relates to group private exchanges, folks are talking about the ability to have predictable long-term cost, to shift to a defined contribution model from a defined benefit model along the lines of what we saw in the retirement space. Cost savings, particularly through employees actually buying down in coverage, providing a broader choice of plan options, which leads to higher satisfaction amongst employees. Mm-hmm. The ability to have an enhanced benefits administration environment, or the ability, quite frankly, to start to get out of the business of providing benefits to employees. So as it relates to questions, we kind of think about this holistically in three fundamental areas: financial, administrative, and cultural. Mm-hmm. And so when we meet with clients, we actually do a financial analysis which shows the impact of buy down, the long-term impact of defined contribution, because there is a potential there for cost shifting onto the backs of the employee. Now, that may help in terms of accelerating their path to becoming a consumer, but I think an employer has to think long and hard about their total HR strategy around employee benefits and their ability to attract and retain employees.
Because it could burst the bubble in some other areas, to your point, right? I mean, it's not a panacea. It's not a financial panacea.
Absolutely. In and of itself, an exchange or a defined contribution will not be the answer. Now, it can, and it will, and it does work for certain clients and in certain areas, but it needs to be done in conjunction with all the other things that employers are doing to to promote wellness, to engage with consumers, and ultimately drive down costs. So in the areas of administration, access to technology and benefits administration and compliance management, I think that's probably the biggest misnomer out there in the marketplace in talking to clients is they think that by virtue of going into an exchange, they can somehow relieve themselves of their compliance responsibilities and obligations, and that's not the case. Right. And lastly, it's really cultural. Do you want to give your employees those plethora of choices? Do you feel that they can handle it? You're transferring some control from a kind of a paternalistic corporate-led decision to one of an employee-led decision, and I think employers are definitely on a weighted spectrum of their willingness or comfort level to kind of move in that direction.
Mike, what are going to be, as we look at this fall, what do you think may be some surprises around exchanges? And let me lead that a little bit, because there's this, two thoughts. One is, a lot of employers are looking at it. Then the second follow-up is, well, it only fits for, people with a lot of part-time employees, or et cetera. But what do you think are going to be some of the surprises that the market may see this fall?
Well, a lot of exchanges that are being sold in the marketplace today are asking their customers for a multi-year commitment, right? Mm-hmm. Yet the underwriting cycle is still on a 12-month basis. Mm-hmm. So I think the biggest likely surprise would be high renewals. Mm-hmm. And so if you've built your business case on a defined contribution model, for instance, and being able to hold your cost increases to CPI or some lower percentage than certainly medical trend, and your renewal comes in significantly above that's a pretty unpleasant surprise that an employer may face. So that's why all the other things that need to take place will need to continue around wellness management, health management, et cetera, et cetera. So that's probably the likely surprise for some clients. We are another surprise or a kind of a building of momentum is really not in the group exchange area, but in the individual area. And I think you touched base on it, which are a lot of employers are looking at their traditional non-benefits eligible populations and providing access, to the individual exchange marketplace. I think is definitely generating a lot of interest and demand in the marketplace.
Mike, is it important that the right exchange partner be able to help that employer shovel their employees to the right exchange? It's been written even in one of our latest Outlook that success is going to be those exchanges that can shovel the employees maybe to the Medicare option if they qualify, or maybe to public exchange if a subsidy applies, or the private exchange. What are your thoughts?
Well, I think a good example on that is in the area of COBRA, right? Mm-hmm. So a good exchange should offer access as an alternative to COBRA. COBRA does not go away. Right. Back to my comments about compliance will remain even inside of an exchange. But, as somebody goes out on COBRA, they may not be able to afford the 102% of premium that an employer can charge. Likewise, they may not have as many medical conditions that would necessitate or require that they buy COBRA coverage, but they still want, and by virtue of ACA, are required to have coverage. Mm-hmm. So providing access to those individual exchanges as an alternative to COBRA is something that a good exchange should be offering to their customers.
Mike, this is Brent, and welcome to the program. One of the things that was talked about early on a couple years ago is that were the brokers really going to have a role in these exchange models that we're rolling out? And obviously we see that they do have a role in these exchange models. What should an employer, what should they expect from their broker / consultant who's working with them on looking at these models?
Well, I think what we've done is kind of remained objective, right? Mm-hmm. So it's hard to It's hard to provide advice and counsel to clients if in fact, what you're going to ultimately end up is recommending your own owned and operated, product in the exchange space. And so that's why a lot of the early kind of exchange models, it's no surprise, came out of those organizations that had large benefits administration businesses. So that's kind of stop number one. What we've been doing is we've taken a neutral approach to areas like HR technology and benefits administration for years, and so we have access to understanding kind of the broader model that an employer would undertake. So the first thing is making sure that the solution that is being offered is one that fits with the client. So we have kind of standard prepackaged solutions, bundled solutions that we can provide access to. But, and I think you're going to talk to Alyssa here in just a few minutes, the majority of our clients are actually looking for us to recommend an exchange solution to them that really is customized to their own particular needs.
That makes sense.
Now Mike, we got about a minute left. Kind of leave the audience with one or two good takeaways on what they really need to look at from your opinion on these exchanges.
Well, I think first and foremost is really looking at a multi-year projection, particularly if you're considering defined contribution, and then running some models on assumed levels of increased cost, because at some point, an employer is going to be faced with either downgrading their plans so that and in some models they might actually be underneath minimal essential coverage, and at some point they may hit affordability under ACA, and again assuming that everything inside of ACA stands pat. So I would spend a significant amount of early time really crunching the numbers, as well as on the cultural side to say, is expanded plan choice and an efficient administration, is that something that we're really looking to implement inside of our walls?
Well, Mike, we really appreciate having you on the program today. Have a great weekend, and to the rest of our audience, stay tuned for the next segment of Healthcare Consumerism Radio.
This is Doug Field, along with my co-host Brent Macy, and welcome back to the final segment of Healthcare Consumerism Radio. This has been an hour long on marketplaces, and it's going to continue here because we have joining us is John Barquette, who's Director of Health Policy Affairs for Towers Watson Exchange Solutions Group. John, good morning and welcome.
Good morning, Doug. Good morning, Brad.
You coming to us from California today?
That is right. San Mateo, California, where it is a little muggy outside, but it's a good day out here.
Yeah, it's muggy here in Atlanta too. Well, John, there's a lot of swirling activity around exchanges, and you obviously are right in the middle of it with what Tower Watson is doing with your move and your acquisition of Extend Health back in 2012. I mean, just update our audience on where you guys are and what your focus is, and then we'll talk a little bit more about, the exchange market.
You got it. So that's right. Towers did acquire Extend Health, and Extend Health had been running a private Medicare exchange focused on retirees for about 7 years when they were acquired. We're going into our 8th year now, our 8th open enrollment season. And, we believe that exchanges are valuable solutions for employers to implement for the right population. Mm-hmm. I think that's one key message that we put out in the marketplace is moving to a private exchange is not just about offering choice. It's about capturing value that's out there in the marketplace that you may not be able to capture running your own plan. We saw that in Medicare when the individual market, which was continuously reformed by Congress over the years, turned out products that around the country were offering a better deal than many employers could offer. And for active workers, it likely won't be the individual market in the near term that offers that better value. It's likely to continue being in the group market. Mm-hmm. But if you've seen one exchange's products, you've seen one exchange's products. The products that each exchange offers really do drive the value that an exchange can provide. So we encourage employers to make sure that they're going from exchange routing, seeing what their model looks like, figuring out if it's a good fit for their populations.
Are you targeting any specific size of employees? I know you work with a lot of large employers at Towers Watson. Or you? What's your target? What's the Towers Watson target?
Well, I should say just first, so we have 3 exchange solutions within our sort of one exchange platform. One targets retirees. That's the legacy Extend Health solution. One is targeting the full-time employees of large employers. So our group-based exchange is going to target sort of the larger employer segment. And then we also have a service that we're building out. In fact, we just announced it today. We announced today that we are partnering with the federally facilitated marketplace to become a web broker entity, which means we'll be able to offer qualified health plans in the 36 states that the federal government is running an exchange in on behalf of the federal exchange, so we can help certain populations within an employer's affiliated groups. Maybe it's their part-time workers, or maybe their early retirees or COBRA eligibles. We can help those folks find public exchange coverage through a sort of concierge brokerage service that we're putting out. So
excellent.
And in all of those cases where we focus on large employers, but in the retiree space, we've worked with employers of all sizes, and we're continuing to develop our active and access products.
John, one of the things that we always talk about here at the Institute is when you get to a private exchange, you've really gotten to the holy grail of healthcare consumerism and what that concept really is. How does Towers Watson, how do you guys view the consumerism space, and how does that translate over to your exchanges that you're providing?
Well, I think we think choice is a good thing, and it's got to be done in the context where the consumer is empowered, not where you just throw a bunch of plans in front of them and say, hey, let competition go to work right now. Because, as a couple of the folks mentioned earlier, none of us are natural shoppers for health insurance. Most people don't know it. I mean, I worked in Washington before I worked at Extend Health, and I worked in Congress on a committee that was helping to write the health reform bill, and I'd ask my colleagues all the time, which plan did you choose for your health care this year? Because the federal government has a lot of different options. And they'd say, well, I chose this one, but I'm not really sure it was the best plan. These are the people who were writing the health reform bill.
Yeah.
And so an exchange isn't just a website. It's not just a choice deliverer. It's really, you got to empower the consumer with tools, with advice, either on the web or, really importantly, over the phone or in person with folks who are helping you out, with educational materials, with advocacy after the fact. That's what's going to drive value in a choice-based model. I think that we take that pretty seriously here at Towers.
Now, when we were talking with Terry McCorvey with Allegis on the first segment, they had the study that they did that was showing some pretty good results on what the appetite is for employers in adopting a defined contribution exchange type model. Are you all seeing increased adoption within your exchanges? Do you expect more adoption in 2015? What's the appetite right now?
We are seeing a ton of interest.
Yeah.
But there's two things that are going to drive adoption, and what has been mentioned so far, it seems, on this show are these sort of let's call them like the push strategies. You're reducing the administrative burden, and you're offering choice. And these things, you can walk into an employer and say, hey, wouldn't this be great? And they'll say, yeah, you've piqued my interest. But there's got to be something pulling as well, and the pull is going to be the value that a private exchange can provide, short term and in the long term. In the short term, the value comes from being able to smoothly transition all of your folks from a model where they're handed their health benefit to a model where they're now the consumer. In the long term, the value is going to come from the plans that are offered on these exchanges. Are these high-performing plans? Are they plans that keep costs down? Are they plans that don't have volatile swings in their prices? Because you are offering folks a fixed contribution, and you're saying you need to go out and decide what to spend. And if their prices are jumping around from year to year, or just they keep going up by a lot, it's not going to be that great of a solution in the long run. So the more private exchanges can drive value, the more the market will just pull employers in that direction, rather than just have folks going out and saying, hey, wouldn't this be great? More choice, less burden.
And the more consumer-focused that these exchanges are in presenting that value and the service and education, to your point, around it, there's really going to be no reason for an employer or a consumer to leave that exchange once they've embraced it, correct?
I would agree. One thing I think that's fascinating about this transition is that when you sort of think about health insurance over the past 30 years, initially you had indemnity plans, and then you started to have different models spring up that tried to get the consumer to have some skin in the game. First you had a copay, a deductible, then you had co-insurance. Now we have these high deductibles. But in a private exchange, it's not just the co-insurance when you go see the doctor or the first $2,000 of your plan year. You're putting the whole kit and caboodle in the hands of the employee consumer and saying, you've got a family, your plan is going to cost $12,000 this year. You're going to decide how all $12,000 of those dollars are spent. Mm-hmm. That's an order of magnitude greater responsibility, or looked at another way, empowerment of consumers and consumerism in this marketplace. Mm-hmm. This is a big deal.
Yeah, and John, you just alluded to it there. What's a little bit more of the impact on the consumer? So we are going to all be given more choice and tools to become better consumers of health and healthcare. What are some other impacts on the consumer that you think that we'll see entering into these?
Well, I think there's a really interesting tie here to wellness and other programs that employers have in place right now that are driving value in their plans. We think that a move to a private exchange doesn't have to mean you giving up other strategies that you've been putting in place for years, like account-based plans and long-term financial planning, like the types of custom care management protocols or programs that employers have adopted for their employees/patients. And then wellness in particular, there's no reason why your wellness strategy shouldn't align with your contribution strategy and your exchange strategy. And I think the perfect ecosystem is a private exchange working with an employer to create an environment for their employee consumers to thrive, both as in their health and in their financial management.
And John, one of the, I want to see if you would agree with this. One of the things that I guess kind of a question too is that Doug talks about is a lot of employers might not make the step to go to an exchange right out of the gate. They might opt to put in a full replacement account-based plan to acclimate their employee population to the consumerism concept. Are you all seeing that at Towers Watson at all, or is it jumping in with 2 feet and saying, hey, here we are, this is where we're going?
I think employers lie on a spectrum. Some of them have been engaged for a long time and are really high performers when it comes to both managing trend and offering a product that their employees truly value, and that is a way that they go out and attract top talent. And then there are other folks who don't have the time or resources to spend managing the plan that they offer. And in some cases, one thing health reform did bring on that I hadn't heard anyone talk about in the show is the excise tax. Yeah. And in 4 years, if your plan is a high-cost plan, you're going to get dinged. Yep. And most employers are not going to accept that. And they're going to have. It's sort of better to take moderate actions now than drastic actions in a couple of years. So I think employers have to look at the exchange marketplace. They have to ask themselves, is this providing me better value in the short, medium, and long term than, say, full replacement or any other type of strategy? And I think, to consultants or brokers out there who are advising them, I think it's the type of analysis. They can offer analysis that says, here's what we've seen with full replacement of other types of products. Here's what we've seen with private exchanges. Let's think about what's best for you and your population.
Don, we got about a minute remaining on the program. Kind of give us 1 or 2 good takeaways for the audience, around what you all are doing with exchanges and what they need to really, key in on.
Sure. Yep. I think, if you've seen one exchange, go out, shop around, and figure out which exchange offers a value proposition that best aligns with your company and its culture and your workforce. And then the other thing, remember that exchanges need to offer value in the short run and the long run. In the short run, that means having expertise at transitioning folks from being passive acceptors of their health plan to active, empowered consumers. And in the long run, it means managing an exchange or a marketplace that's got high-value plans that offer quality coverage and help consumers from year to year pick the best plan.
Well, thank you so much for your time today, John, and we really appreciate you joining us. And to everybody, IHC Forum West will be December 5th and 6th, and we will have in-depth detail on private exchanges, and there will be some private exchange vendors out there for you to seek out. And to everybody, until next week, this is Healthcare Consumerism Radio. Thank you.